Microphone is hot. Let's see who's coming in. Good morning, Debbie, first in the room today. Jessica, welcome. Matt, Dwayne. Oh, this is fantastic turnout. Really coming in fast here. Hey, everybody. Hey, David, Eric. Everybody's flooding in. Let's get organized so we can get everybody's chat. If everybody wants to just post an emoji or something in the chat, just how you doing today? Okay, good. Still coming in. Hey, Eric. Yeah, good smiley face. Good morning. Yeah. I'd be interested to know what part of the world people are in. Is it morning for you, evening for you, afternoon? UK. Hey, Simon, great. Okay. So thank you for coming, everybody. I think there's people still going to be trickling in. I'm going to hand over to Scott to get us underway.
All right, guys. Everyone can hear me okay?
Yes.
All right. If there is any internet issues like there was yesterday, just let me know and I'll go switch over to another Wi-Fi network. Okay. Okay. So thank you everyone for coming yesterday. And today, what I'm going to do is I'm going to go over and review what we did yesterday, and then I'm going to take some questions. And then on the call, we have some of our superb, like really superb coaches. We've got Ian Hamshaw, who you can see now. We've got Carolyn, we've got Maurizio, and we've got Paul Clark, and Rowena Rosa. And so I'm going to put them on the spot, and I'm going to get them to do the actual thing in front of me. And one of the things I'm really proud of in this company is that all of our coaches, I think with only one or two exceptions, came through our learning products. So these are coaches that used to be customers, and they're exceptional. They're really, really good. I would love to learn from them. Yeah, and I coach as well. So anyway, so let's get to it. So let me share a screen. The first thing that we always check is Bitcoin. Bitcoin is the tail, the altcoins are the Bitcoin is the dog, altcoins are the tail. So I can now let me show you. This is the futures perpetual funding rate plotted for Bitcoin for the last couple of days. So you can see that not all the time, but when the funding rate gets too positive, this is the market tends to go down. When the funding rate gets too negative, like it did here, you can see that the market went up from here to here. The funding rate got too positive, and you can see the market crash down here. The market rate, the funding rate got a bit negative here and it rallied. The funding rate gets positive here. And so even though this doesn't work out every time, 100% of the time, you can tell it's sort of, 60, 70% of the time, this is kind of working out. So when this funding rate is positive, like it is right now, we're looking to bet that the market goes down. And so this is how we solve the problem of, I don't know if it's going to go up or if it's going to go down, I can't bet. So the next thing that we do is we have our charts open. We have 15-minute charts open here. I have a 30-minute chart open here. I have a 60-minute chart open here, but I don't need to consider these ones first. I'm just going to look at the 15-minute chart, which I got up on its own by clicking this little icon down the bottom. Bing, bing. Okay. So what I'm looking for is a short setup. So the first thing I need, element 1, is a touch of the Bollinger Band. Element 2 that I'm looking for is a lower close. And element 3 is a higher close, all without breaking this line. Now, we've only got element 1 so far. So the next of those elements, if they happen, are going to happen over the next sort of 30 minutes to 1 hour. So we're just going to keep coming back while we talk, and we're going to check in on this a couple of times, and we're going to see if we can't just, if we get a trade, as soon as we see this pattern here, what's the next thing that we do? The next thing that we do is we also need confirming evidence on the 30-minute chart, which we have. You can see that it's touched the band on the 30-minute chart. We also need confirming evidence on the 60-minute chart. Let's touch the band on the 60-minute chart. If we've got all of those, then we're going to go to our spreadsheet. And we're going to put all the data in here, the time, the setup. We've got this nice spreadsheet that makes it super easy, whether it's long or short. And we're going to say, is it Bollinger Band or trending, and confirming evidence. And we're going to put the target. And so it's going to do all the calculations for us and tell us what size we need to bet. And then we're going to take the trade. And so that's the way it is. Now, there's a couple of ways we could go here. Would you guys like me to go over the price action setup again, go over the confirming evidence again? Like, what is the part of yesterday's presentation that was least clear to you? And then after we do that, I think I'll take open questions, and then I might get some of the coaches to demonstrate the system and see how well they do it, so that you can tell that it's not just me. Okay, so let's go over the price action setup again. So for a long setup, and these are not, this is just the Bitcoin chart like right now. For a long setup, we need a touch of this lower band here. And when it touches the lower band, we put a line under it. And as soon as price breaks through this line, hey, Tony, nice to see you, man. Yeah, it's also recorded, man. We put a line under it. As soon as price breaks through this line, we cancel the setup. So we have three elements. Element one is a touch of the Bollinger Band. Element two is a higher close. Now that higher close could happen in the same bar. It didn't in this instance. So we have element one. We have element two, one or more higher closes. Now we're waiting for element three, which is a lower close. We've got the lower close. At this point, we place a line at the bar high here, and we go long at a break of this bar, and we bet that we go long. Is that clear to everyone? Do you need me to go over that again?
I think we can move on. Let's go.
Sort of clear. Let's do a couple more. Let's do it in reverse. So the reverse of a long setup is a short setup. A short setup is a setup where we're betting that the market goes down and we make profit if the market goes down. So you can see here, we have an upper Bollinger touch. And our three elements become okay. So these became so we have element one, upper Bollinger touch. Element two, we have a lower close. We have it right here. We have element three, we have a higher close. Now, all of these have to be without breaking this green line. Now, what we do is we place an order to go short if price gets below here. Now, that doesn't always happen, and it didn't happen the next bar. What do? We change our order from going short if we get here to the low of this bar, and we go short here. And you can see that after the market broke short, you can see there was a little drift down, and it did in fact go down for a while. Let's go through another couple. Okay. Remember, for a long, we need a lower Bollinger touch, which we have, We need a higher close, which we have right here. And we have a lower close, which we have right here. And we go long here. And the market drifts up. And then we get an interesting situation. We get a setup that looked like it was going to happen here. But don't forget, once we break this green line, which we did here, we start again. So here we have element 1, touch of the upper Bollinger, element 2, lower close, and we're waiting on element 3, a higher close without breaking this line, but it breaks the line, so we start again. Now we have an upper Bollinger touch, and remember we need a lower close. We've got 3 lower closes, and we've got a higher close. So the setup is complete right here, and we go short if it breaks the low of this bar, which it doesn't. So what do? We take our entry point and we move it to the low of the next bar, which it doesn't hit. So we move it to the low of the next bar right here. And we go short right here, and you can see it runs all the way down. Okay, is everyone getting this? So longs and shorts are completely opposite to each other. It's exactly the same setup, just swap up for down. Everyone cool? So we can move on. Okay. The next part of the system is the confirming evidence. We have the idea is, and the principle behind this is, if you're betting on a market reversal, like if we're betting here that it's going up, or betting here that it's going down, the market is actually reversing. Markets reversing is kind of a weird concept because things reverse from extremes. When do markets start going back up? When they've gone down too far. When do markets go down? When they've gone up too far, too fast. So markets reversing are a phenomenon of reversion to the mean. Why does this happen? Because if the market goes up too far, too fast, people will want to take profits, and that profit taking is selling, and selling drives the market down. Similarly, if the market goes down too far, too fast, like you see here, it dropped really fast, then people will think, hang on, I really liked it up here, and now it's down here. That's a good bargain. It's just like something on sale in the department store, right? It's like Amazon Prime Day on Bitcoin. So it becomes more attractive because it's cheaper, and dip buyers step in, and more buyers than sellers drives the price up. So this is the phenomenon behind it. Now, logically, it makes more sense if we're looking at reversion from an extreme position. If it's also an extreme position on the 30-minute chart and the 60-minute chart, then it's a really extreme position. So the idea is that these little wiggles aren't nearly as reliable as the big wiggle that we have here and here. And so we have 2 types of confirming evidence. We have one that looks to reversion from the mean, which is a touch of the Bollinger Band. So here, where are we? Let's go to where we are. Oh, it's up here. So this one here, you can see that on the 30-minute chart, we also touched the lower band. Now let's zoom into the 60-minute chart. You can see we do not touch the band here. You can see there's a little gap. Now, consider what actually happened here. Sure, the market moved up, but it didn't move up enough to get our 2-to-1 risk reward target. So even though the trade kind of worked, it didn't work well enough to give us the money that we wanted. So therefore, if we took this betting $100 to make $200, we would have lost our money. And so we would never have taken this trade because it never hit the lower band. And thus, this saved us from taking a losing trade. Now we consider this one here. Mark, good question. Mark says, I totally get what you're saying. It's great back test and forward test. What is it real time? How do you find what coin is near the top or the bottom of the band within 6 minutes? We're going to show you that in a minute. And let me give you a sneak preview. You load up this spreadsheet, it gives you a list in order, and you go down the list in order. And it's very easy to do 20 coins in 6 minutes. Like, in fact, I won't just get me to do it. I'll get one of the coaches to show it. But okay, so moving on. This one here, we have a sell setup. Is this an extreme on the 30-minute chart? And you can see that it also touches the band on the 30-minute chart. So this is more likely to be an extreme that is reverted. Now, if we go to the 60-minute chart, you can see that it doesn't touch this upper Bollinger. Now, we have two types of confirming evidence. The two types of confirming evidence are: one, Bollinger touch. Two is a trend with a pullback to at least the 8 moving average. This is an 8 exponential moving average. There's nothing special about it. There's nothing magical about it. It's just a place that's roughly where a reasonable pullback should at least get to. So yesterday we talked about our definition for trending down. Our definition for trending down is a 2-stage process. Stage 1, we have a touch of the lower band. Simon, this does not lead to subjective results because we're looking at the same, we're looking at the same list in the same order. If you're, and we prioritize the trades based on where they are. So if you're looking at this one, you take this one if there's a trade. If there's no trade, you go to the next one. If there's no trade, you go to the next one. If there's no trade, you go to the next one, and so on and so on and so on. So in theory, and in practice, you should be getting the same at the same time. So our trending definition is a 2-stage process. Stage 1 is we touch the lower Bollinger. Stage 2 is we have a single candle with a lower low and a lower close than we've had so far. So here's our low. There's our low and there's our close. So this candle here has a lower low and it has a lower close than we've had. So we start trending at the close, and that's important, of this candle. When do we keep trending until? We keep trending until we either touch the opposite Bollinger or we go 20 bars without making a new low. So we are trending from the close of this candle here to the point where we touch here. So now if we go back to where our setup is, which is, hang on, sorry. If we go back to where our setup is, which is right here, are we trending down? Yes, we're definitely trending down. Is that trend pullback past this blue line, at least to the blue line, sorry. And it is. And so we have a price action set up on the 15-minute chart. We have confirming evidence, a Bollinger touch on the 30-minute chart. And we have our second and rarest type of confirming evidence on the 60-minute chart, which is a downtrend, which with a pullback to moving averages. And so we have it right here. Now, one thing that you might not get is that most of the time the confirming evidence is a Bollinger touch. So it makes logical sense to check for the Bollinger touch first, just because it's there most of the time. this trending, which is more complicated, is something that it doesn't make sense to use up your cognitive load, your scarce brain power on this until you've already checked for the other thing, which is there most of the time. Okay, questions, guys? So this is it. This is the meat and potatoes of it. Like, I know it's not nothing. Like, it's like there's work here. Surely people have got questions. Come on, come on. I've taught this a lot. Like there is always questions.
People are maybe thinking that this is too simple, and that's a perfectly understandable thing to think, for the reason that, as Scott said, this isn't nothing. There is work to do, but this is the system.
Okay. Bob has some, well, it's not that easy, Simon. We're going to show you that. We're going to put it together in a minute. And just so that you know that it's not me, I'm going to pick a random coach and get them to do it. Just so we can see that normal people can do it. And then we're going to show it with real live prices right now. And we're going to take the actual trade right now. So that's in a minute. So let's go through target setting of the trade. So I can teach you this from first principles, or I can show you how to do it in the spreadsheet, in our spreadsheet tools. What would you guys prefer? Tony, you don't have to trade at the same time every day. You find 6 minutes that works for you. Mark, it works on coins that are liquid enough to trade. So it's not as much about the volume. We have a mechanical rule for which coins that we don't trade. So, for example, I happen to know that coins that look like this are terrible and untradeable. So we don't trade those. But we'll get into that in a minute. Okay, first principles. Okay, let's understand the mechanics. So let's find that trade that we just took, which was here. So we are going short at 2474.8. Stop loss is 2682.9. And our entry price minus our stop loss is the risk. So our entry price is $208.1. So what this means is for every one Bitcoin that you take in this trade, your risk is $208.1. Let's say we want to risk $1,000 in this trade. How many Bitcoins are we gonna size the trade at? Put your approximate guess in the chat. Tony, 5. Simon, 4. 5. It's just a touch under 5, because it's $1,000 divided by 208.1, 4.80. So our risk is 4.80 Bitcoins. How much does one Bitcoin at the entry price? The entry price is 474.8. So we're talking 4.8 Bitcoins multiplied by 2474.8. So our total size, 98,389 to risk. So what size account do you think you would need to have, keeping in mind that they'll let you have 100-to-1 leverage? You know, they'd let you take this trade if you had $2,000 in your account, but that would be crazy. What size account in the real world do people think that they should have? And by the way, you never have to understand this from first principles or do it in your head like I do it. I would say a minimum of, most people are saying 10K. I would personally say probably 20K is where I would personally size that trade. But 10K would be okay, but only just. So I would say somewhere between 10 and 20K, depending on how aggressive you are, is the account size that you need to be risking it. And actually 10K is too small. Honestly, 10K is too small. It would have to be 15K. So how did I get the 98,389 formula? We're risking 4.80 Bitcoins, and each Bitcoin at our time of entry is costing us 20,474.8. So we multiply 4.80 by 20,474.8. Now, I want to triple stress that this is not something that you need to understand in any way, shape, or form. Someone just asked me to do it from first principles, and what we do in the real world is we have a spreadsheet which does it all for us. Because the more of the everything that you do in your brain is finite, right? So if you've got, the way that I think about it is that you've got $1 worth of attention, and you can spend that $1 worth of attention on anything you like. If you spend your if you spend 95 cents of your $1 worth of attention on doing stuff with a calculator, you only have 5 cents left to think about the markets. And what happens when our brain gets filled and we use even 1 cent more than our $1 worth of attention, you turn into a mashed potato. Like you look at the charts and you go, I'm going to do this. This is crazy. How you expect me to do this? It's stupid. And so what we want to do to make this, don't forget, you don't have to just do this today. You have to do this every day, or most days. And you have to do it. We have to be planning on doing it, not for the next week or the next month, but this is something that you want to settle in and do for years. If you want to settle in and do something for years, it has to have that same habitual character as brushing your teeth in the morning, or making your cup. Like before I got on here, I made my cup of coffee. If you ask me how I made my cup of coffee today, I couldn't tell you. Just happened. I staggered out of bed, took a slash, walked into the kitchen, cats were meowing, put the kettle on, and by the time I'd fed the cats, the coffee was being made, and it just happened automatically, right? Like that's the way that this should do. It should happen in the background without you even thinking about it. And the way to do that is that we get as much of it as we can into these spreadsheets and out of your head. So the less thinking that you do, the better that you're going to be. All right. How about Maurizio? Can I put you on the spot, bro?
Sure, man. Sure.
Right. Why don't you do the thing in real time? Take the trade. Come on, man.
Sure. All right, Scott.
You know it's going to be difficult because we're putting him on the spot here, right?
No, that's all fine, guys. And at the end of the day, it becomes really simple. The system, it becomes really simple. Let me just share my screen. Obviously, you're going to see some things different because this is how I trade every day. And it doesn't take me long because I already set up sort of my screen.
How long does it take you? Like, I'm curious.
Usually
6 minutes, just bullshit? Or can you really do it in 6 minutes?
I have, like, finding the coins is quite easy. You know what I mean? It takes 5-6 minutes. Placing the trade sometimes take you a little bit longer, right? So that's kind of, in essence, my experience so far. There's some days that I do it in 15 minutes completely, like I work out. Some days half an hour, because I have rules in terms of my own execution, and I want to make sure that I get all those filled before I stand out and set and forget. But you can actually just do it like that without it, and then you'll be fine. You know what I mean? But then that's sort of my own rule, my own trading. That this is my I sort of set up always an hour. It usually takes me around 30 minutes tops to do the whole process. You know what I mean? Like, but I'm doing the whole process step by step, fill it out. And I do record videos on my own trading. I'm very thorough on my record, on my things. I'm a perfectionist. So that's, you know what I mean? Like that, that's the way I want to keep it. And I think I have an hour for a day's worth of, for a career, and then you do whatever you want. I think it's worth it. So, that's just me, in terms of my own process. And I keep records very strict. Like I said, I do videos of every day that I trade, and I review my videos every day. And working with the squad, I sort of that's the way that I improve my trading every time. So that's why it takes me that long, right? So let me just show you my screen. So, and you guys see my screen already?
We can, Maurizio.
Beautiful. So the way that I set things up is I have my trading view, I have my funding rates, and I have a list here, of things that I'm going to be trading on the day. Long, short, maybe long, maybe short. So first things first, I load BTC just to see if we have a setup or not. It is kind of setting up for a setup. And I look at my funding rates. You can actually use CoinGlass or the spreadsheet to look at your funding rates. And I can see that Bitcoin, let me just take this show predicted. And it was, funny enough, interesting. Let me reload this. But it was showing positive just like 10 minutes ago. Now it changed to negative, so to speak. And then that, like, I loaded this at the beginning of the call, and if I search for Bitcoin, and that's my funding rate, it was actually showing positive, and now already changed. But that's kind of the funding rates, how they work. So I always go by my sheet when I start trading. But as you can see, it's setting up for a short. If this high is broken, right? If this high is broken, then we don't have a setup anymore. Like, that's kind of what I'm looking for on this one. That's it. I'll put it on my list, and then I keep going. So that's it. So I don't have to think about it. I just put it on my list, and this candle is going to finish in about 15 minutes. Therefore, I have 10 minutes on the clock to watch more stuff to see if something more interesting than Bitcoin is happening. So I start going through my list. And by the way, I organize this on an absolute value, and you will learn how to do this anyway, but then it makes things easier for me. So I go down the list, sell perp. All right, there we go. So have a look. It broke the high, therefore, no setup. It might have a setup in the next, now I need to wait probably 2 or 3 more candles for this setup to be completed. So I don't care about Bitcoin anymore. I'm pretty sure now sell perp is actually showing me that it has a positive. There we go. So we have a setup here. I can pinpoint it right away. So essentially, where is my setup? Why do we have a setup? We have touched the Bollinger on the 15. We have touched the Bollinger on the 30. And yes, we're trending on the 1 hour, and I'm just going fast, and this is how it is. And essentially, my trade will be from here, and I'm gonna use this magic tool that Paul show us how to do, and it's just the Fibonacci, like it's just a hack of the Fibonacci. Paul actually made it up, so that's actually a really good way to figuring out your risk reward. So this is your risk, and that's your target. And I just do very exact numbers here. I hover over the candle. My high is 78.50, my high here is 76.50. So 76.50, and the order should be 1 tick above, and my low here will be my low is 71.40, still 71.40. Right, and there's one tick below. And now that I have my numbers, this is my entry. Now that I need to, now I have a trade. This is a real trade, by the way, guys. And this is an RTC and an RTV, both on the same setup. Why is an RTC? Because we have a hammer candle. Why is an RTV? Because it's a lower close, one or two more lower close. Now, I'm gonna put that on my spreadsheet. So today is the 14th of July, right? And this gonna be sell, and this is gonna be an open trade. And today is 9:36 a.m. This is my time. I'm in Australia. And this is, I'm gonna label as an RTV, and I'm going long, and I'm just log my funding rates there. Give me 1 second right here. And I say that this is a Bollinger touch and the 30 confirmation, and this is on trending. And essentially, once I put this value, my target entry is 0.7655. And my target stop loss is 0.7135. Essentially, I already have all the calculations here that I need in order to go and place this order on the let me just see this. Let me just copy this formula. For some reason, this is a different. There you go. Right. So if I'm risking 1%, this is whatever you set it up to. And like Scott said, Scott trades at $1,000 as coaches. As a, you know, the mindset is very important when you actually trade, because it doesn't feel the same when you're actually risking 1% or 2% or over $10,000 account when you go to 5% and you start risking $1,000. So having that reliability and a coach to help you out in increasing your sizes every time safely, right? Therefore, that's something that I've had with Scott that is really helped me to increase, to perform well, and not to be afraid of increasing my sizing, so to speak. So, and that's what you want to get in terms of becoming a professional trader, how to emotionally go through your pitfalls, trading wise and mindset wise, so you can actually perform at your highest level. So that's, and thank you, Scott, for all your help, mate. Appreciate it. And that's it, guys. So essentially, this is the spreadsheet. It tells me that I need to go on and buy this amount according to my and this is my demo account. And essentially the way that I set it up is, if you guys have a look here, $2,800. And then I'm risking 1% of my $2,800. So I'm risking $28. And this is the amount that I need to go and place in this in the exchange in order to place this trade. And that's it. You go place it and you continue. Now I put this on my list, right? That will be a long trade that I need to go and place in this exchange. And then I usually go to exchange and place it, but just for demonstration purposes, I'm basically just keep going and already set up. And now I go to the next one, keep going down the list, GST perp. GST perp, so obviously we have some rules around what to trade and what not to trade. So this will be a non-tradable because of the volume.
Can you explain that? Because some of these coins with these janky, weird looking bars are actually untradeable in the real world. They haven't got enough volume, they haven't got enough liquidity. And so instead of saying like, I like this one, I hate that one, we have a set of rules around it to say when they look like this, we don't do them. So do you want to just run through those quickly? Because it's something I didn't cover.
Sure. So the rules are essentially, if you go into the 15-minute chart and you see a lot of dashes, or you see at least 3 dashes in the past 20 or 30 candles on the 15 minutes, what that means is that there were no trades whatsoever on that 15 minutes. So that's kind of no trades, no volume. No one wants to buy, no one wants to sell from a psychological perspective, right? Therefore, we'd rather stay away from those coins. As you can see this one, right? The volume, we have a dash here. And these ones that have, there are dodgy candles here, they're dashes. And this could mean that it's 1 or 2 trades only on 15 minutes. So essentially it could be really easy for someone to move the market either way. So your stop loss is going to get hit. So that's kind of in essence why we don't trade them, right? That doesn't mean though, that when you arrive tomorrow this coin GST perp is full of liquidity, is beautiful to trade. And you guys know that crypto is like that, you know, once what is forgotten, then next day you have the best liquidity, the best coin, everyone loves that coin, this is amazing. So that's why we always go through it, because you never know when it's going to have that liquidity. All right, so it's all good, it's all clear. Should I keep going down the list, see if we find another one? So GST, same thing, we keep going. SOS, perp, and you look at, I know this one is horrible, so I just want to show you that not all the coins, you know, so that this is a non-tradable, definitely by our definition. Then we go Oxy, perp. Same deal, we don't trade that one. ASD perp. ASD perp. All right, so we might have a setup here. Let's have a look. So I have a 15, touch the 15 here. We have trending on the 30 and we have trending on the 1 hour. So essentially we have a setup, but this one seems like it's already away from us. So so we're going to the rules. So this will be an RTV. No, actually this is an RTC here, right? So if I measure this, right, I also, it already played out. So if I was here at 7 o'clock in the morning, my time, I would be taking this trade. Now it's already gone, not a problem. Keep moving, that's it. And then AMPL perp and AMPL perp, you can actually see these dashes, so I don't even bother. KSOS perp. KSOS perp, there we go. So KSOS perp is telling me that I should be not going long. Do I have a touch of the Bollinger on the 15? No, I don't. So I keep moving. Eden perp. And that's how you scan the market and keep going. RSR, some days you'll find all the coins. Some days you will not find a trade as well. So don't be afraid that, oh, I need to find a trade. No, that's part of being a professional trader. No, and the system tells you if it's not a setup, it's not a setup. You went down all the way down to probably 20 or more. And if you don't set a setup, don't force it. That's what the system is telling you not to do. But that's awesome as well. You know what I mean? Not to trade is actually win.
It's very important that Mauricio's pointed out a really important advantage that we don't have many advantages as little home guys sitting in our bedrooms, like trading. We don't have any advantages over the big banks. One of the only advantages that we do have is that we can say, no, not today. You know, if you're working for Goldman Sachs on their prop desk and you come in and tell your boss, you know what, boss, don't like anything today. I'm just not going to take any trades for the next few days. Your boss will fire you after you do that a few weeks in a row, and your boss is going to say, motherfucker, what are we paying you for? You're not doing any work. But as home traders, if we don't see a nice fat pitch setting up for us, we don't have to take it. And it's a very, very important advantage. And we have so few advantages as little guys. You know, you'd be mad not to take that one. So the system very elegantly keeps us out of the trades that we shouldn't be in. And that's why we have the funding rate, the price action set up, the confirming evidence on the 30, the confirming evidence on the 60. All four of those things can potentially keep us out of a crappy trade. So if you've got all four of them together keeping you out of a crappy trade, that's a red flashing light that you shouldn't be trading right now.
Mm-hmm. And on that, Scott, I agree. And part of the biggest thing sometimes with traders of myself is the necessity to always place a trade. And that's you know what I mean? Having the system there to tell you not to trade and knowing yourself and your emotions say, I'm not going to trade unless the system is telling me, that's amazing. You know, it takes all that off, like all that thinking away from you. Oh, should I trade? Should I don't? Should I buy? Should I sell? Which is great at the end of the day, you know?
There's a follow on when I'm taking a trade that I'm choosing and I'm betting on this coin's going to go up and it goes down instead, I look at it the next day and I go, oh, you dick. The fuck were you thinking? Like, and I feel like a loser trade abuser. And but when the system takes a trade and the system loses, doesn't touch the sides. It's like, oh well, the system took a losing trade. I'm still fine. And so it doesn't bounce around. A lot of what beginning traders go through is this like agony and the ecstasy and wow, I'm winning so hard, I'm gonna be the greatest, and oh no, I lost all my and you don't get that. It's just like kind of like it's boring. Like coaches here, like who would say this is like the most fun way to trade?
I wouldn't from the trading perspective, but emotionally is freaking awesome. And the reason why is because the reason why is like you come in, you do your hours, so to speak, half an hour, and that's it. That's the only mindset that you need to do. Trade like a freaking robot. Like you arrive, you do the things, and you put your trades. That's it. You know what I mean? Like from that emotional perspective, I think it's awesome. From the trading, obviously, we like to develop more things, put in indicators, put this, research this coin, do the back test. I know what you mean in terms of, but emotionally, I think it's great. Yeah.
So Mark is asking, does this work in bull, bear, and sideways? And it does. It works exceptionally well. And the reason why is the combination of the two different types of confirming evidence. So if you consider what happens if we have a Bollinger touch on all three of those charts, we have the entire market reversing. So we have a complete change in direction of the market. That is going to work at any one time. We've got three things that can happen. The market can be going up in an uptrend. The market can reverse and go down in a downtrend, or it can go sideways and just chop around and do nothing, which it does most of the time. So when we get the Bollinger touch, we're covering 2 out of those 3 bases, which is why we have an edge. If we have Bollinger touch and trending, we're looking for a reversal on the 30-minute chart, which is in line with a longer running trend on the higher time frame 60-minute chart. So we're in effect a trend following trade. And if we have a trend on the 30 and a trend on the 60, then we're in one of those very, very strong trends. That's a trend on the 15, a trend on the 30, a trend on the 60. Bob, not in principle. Let me just share my screen, and let me show you. We've been trading this for we've been trading this for a couple of years in FX before we started trading in crypto. So let me show you the results here. You guys can see the spreadsheet up. Okay, so we started trading this in August 2019, and this isn't a back test. This is like the real world results, and been trading it continuously all the way through here. And so what does it look like? Let's look at the equity curve, and then we'll look at the so this is the equity curve over how many trades? 2,400 trades. We've got 1,290 wins, 1,030 losses, only 53% win rate. We're not trying to shoot the lights out here. But you can see from 2019, if you think about what happened, we had a very stable market in 2019. Then we had the coronavirus crash, which was this period here, did amazing. Then we had the rally after the coronavirus crash, it did amazing. And then we had our bear market that started this year, and we've done amazing again. So through a very stable market regime, through the biggest crash in 100 years, like the corona crash was the fastest crash in 100 years, through the biggest rally in 100 years, and through the subsequent bear market that followed it, like, look at this thing. It's just steady and steady and steady. And yeah, it's just a very battle tested kind of a thing, right? Yeah, this is the old Holy Grail system. So Tony traded this back in the day. So this is an evolution of, this is not something that we just made up. This is something that's an evolution of what I've been doing for 10 plus years. And the difference between the FX system and this is that it's much simpler. So the funding rate really, really turbocharges the edge. It makes it about 300% better. It's just, you would be better using the other system on FX, which is slightly more complicated. The edge is less on FX. You can use it, but the edge is less. And we traded it on 2-minute charts in FX. We're trading it on 15-minute charts here. I have a strong preference for the way we do it here because you don't have to sit in front of the screen, whereas a big downside of the FX trading was sitting in front of the screen. FX is foreign exchange, Sonny. Like Euro, US dollar, Australian dollar, US dollar, Australian dollar, JPY, that kind of thing. Honestly, crypto is much better than FX. Like, is there anyone in the coaches who doesn't agree with that?
No, I think yes, I agree. In crypto, you have the advantage of the volatility in a way that when it works quick. Maximum 1 or 2 days. The maximum trade that I've been, the maximum time that I've been on a trade is actually 1 day, and that works for me.
Yeah. The funding rate is, it's kind of complicated, but I guess I got to explain it. So there's for every long there's a short. There can't just be more buyers than sellers. There has to be sellers. But if Bitcoin is going up very, very fast, who would bet against it? Less people want to bet against it. So they need an incentive to bet against Bitcoin. And the incentive is that longs pay shorts a penalty, and that penalty is in the form of an interest rate. And the longs pay the shorts an interest rate for going short. And that interest rate is substantial. It can be as high as 100% a year. It's a very, very, very strong incentive for me to look at Bitcoin and say, well, Bitcoin's going up really fast, but you're going to pay me 100% a year to bet against it? Like, well, actually, that makes pretty good sense now. So it kind of balances the ledger. And so what we're doing is we're betting only in the direction of that balancing force. And why? Because big institutions and big hedge funds and big banks, they love this balancing feature, which is called carry trading. And if you Google carry trading, you'll see that it's like one of eclipses all other forms of trading, actually. Like there's like $3 trillion worth of global carry trading going on because banks like to get a small interest rate for doing nothing rather than taking a big bet on direction. That's what banks like. They're conservative. Banks are conservative institutions by nature, and hedge funds are conservative institutions by nature. If they can lock in an interest rate, they will do so because they much prefer to do it that way. Carolus has a good question. Maurizio, do you want to take that? If you see a setup but you missed it, when should you put a limit on it? That's a really good question. And before we do that, Matt G, have you back tested performance with a break-even stop at 1R? Yes, I have. And 1R, moving your stop to break even at 1R makes less money, but it's emotionally much easier. Why? Because if you almost hit your target and that comes back and you loses, it can really hit you in the feelings. So there's some argument for doing that, but it's inefficient if it hits your stop loss. Almost by definition, you have to make less money. So you're trading less money for emotional security. Sorry,
cool. So no, that's fine. So yeah, that's a really good question. And if you arrive late to a setup, right? That's a really good example on the ASD, the one that I just showed. That's live, all right? And ASD, PERP, and the reason why that one is a good example is because that one is already away. So we arrived late to a setup. So this is real life market. The setup actually happened here, right? So when you measure using your FIB tool, then we have two things. The first one is we noticed that the setup sort of started here. So if you were at your computer at 7 o'clock in the morning, well, that's my time, then you would be taking that trade. But because you arrived late, now that trade already reached 1 hour, and that trade already reached the target profit. So you don't place a trade, you don't place any limit. Let's assume that you arrive late into a setup and the price hasn't reached the 1 hour. Then essentially what you do is you place the limit order at the level that the trade should be placed at. And if the market goes down and fills you, that's great. But if the market keeps going, that's great as well. You don't take that trade. You put the limit order, but you never took that trade. That's not a problem. You cancel the order and you trade again next day.
Do you ever feel upset when that happens, when it runs away without you? Or does it
yeah, that's a really good question. And essentially, yes, at the beginning, of course, like, oh, I'm always late to a setup. Oh shit, and all this emotional thing. At the end of the day, don't get caught up. You just keep trading, and it doesn't affect me anymore. You know what I mean? Because you trade as a mechanical system, and that's how you play it. Like, but yeah, at the beginning, yeah, definitely.
So one of the things we kind of try and preach is that what it feels like is that the most important thing is how much money we make on this next trade and whether this next trade is going to work. But what is really and truly the most important thing is how well the next 1,000 trades go. You know, the next 10 trades, like, it actually doesn't matter, but it feels like it matters a lot. And the reason that is so is because if you think about where we evolved from, we're like kind of cavemen. And if you're sitting around a campfire on the African savannah and you hear a rustling in the bushes, you have to stop what you're doing and go pay attention to that rustling, because it might be a lion, it might be a tiger. And so deep baked into our humanity is the idea that recent information is much more relevant than old information. And we're DNA bound to over prioritize anything new over anything old. And we see this in every aspect of our life. Like, if you walk into a Foot Locker to buy a new pair of shoes, you're looking at the ones that are just released first instead of the classic ones, right? Like, most people do that. If you're looking to watch a movie, you're going to go watch Top Gun, which was awesome, instead of some classic movie from like 20 years ago, right? Like, if you walk into a bookshop to buy a book, like, there's plenty of books that have been published for 100 years that are amazing. You're probably going to go to the new releases, bestsellers book list. So we always overweight what is just happening now, and we always feel like what's happening now is very, very important. And this really hurts traders, especially when they start reading the news. Like, if you start reading the financial news and paying too close attention to it, it just ties your head in knots and you just turn into an idiot, because you think that, oh shit, we got a big inflation print today. Like, fuck, I can't take this trade. You know what I mean? Like, so it's just very important to just settle in and just follow the rules and turn your brain off. And, you know, it should feel like, you know, driving down the highway on cruise control. Like, you kind of hear, but you're not 100% involved. Mark, consistently making just 1% a day will eventually make you financially free long term, where one really bad trade can end your account. Well, you should never put yourself in a position where one bad trade can end you. Especially with leverage. Leverage trading is different than position trading. If you're trading without leverage and you make a catastrophic mistake, you can just throw that in your back pocket and maybe it comes good in 5 years. You can't do that with leverage trading. You have to use stop losses every time. Yeah, Matt, we did test it. No, it didn't work out that way for us. Didn't work out that way. What we're finding is that the funding rate is really the big dog in the FX game, and it pushes things around like really substantially. So trading against the funding rate is generally a mistake. Simon, exactly so. You should not be interested in the dopamine hit. And so the dopamine hit that I want to encourage you to take is when Maurizio loaded up his trading spreadsheet and I saw all those fields like filled out perfectly. I thought, oh, wow, that's beautiful. It's fucking amazing. Like that's the dopamine hit you want is the one that actually makes you a better trader, which is, oh, wow, that's those spreadsheets and screen captures. That's awesome. You know, the beautiful log where you take the video of you taking your trade, like that shit is amazing. Tony, we no longer have hammer and shooting star trades in the system. We've simplified it. That's something from the old FX system. Any more questions, guys, before we wrap this up? I know Maurizio's just got another call. Feel free to drop out if you need to, bro.
All right. Yeah, I think I have a customer, a client. So, hey guys, it was really was fun. Thank you very much. We'll see you next time. Thanks, Scott. Bye.
Simon, no, we've got this works with 50 different brokers, Binance, FTX, Bybit, bunch of others, Woo, bunch of others, like 50 of them. Yeah, you can get a replay. I'll publish it on YouTube today, guys. I think we're good. I think we covered everything, right?
I think we have, yeah.
All right. Thanks, guys. Any more questions, just let me know in the YouTube comments. I'll do my best to answer.
Cheers, Scott. Thanks everybody for attending today. And as Scott said, the video will be on YouTube later on today.
Good man. Thank you, Ian. Really appreciate your work here today, bro.
Thanks, everyone.
Cheerio. Bye.